Good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Tuesday, April 30th. Hope you guys enjoying the day so far. We do got a lot of data kind of covered this morning, so we'll just jump right into it. We'll start off with the employment cost index for the first quarter. The previous reporting came in at 0.7%, and forecast was calling for that same trend at 0.7%, and it rose 0.7%. So straight across, 0.7 across over there, so it's a nice trajectory there. But something we definitely want to keep our eye on, because if it's rising too much, that could also raise inflation here. Right here, we got some housing data here. We'll start with the Case-Shiller home price index. This is one of the many different indexes we kind of look at. Year over year, it went up 4.2% back in January, and then in February, it went up 4%. Now we got manufacturing in the Chicago region. So we have the Chicago PMI for the month of April. So in March, we had a pretty nice number here at 58.7, but it did, however, drop all the way down to 52.6. So something we do want to keep an eye on. We've been starting to see that in a few areas here with manufacturing pulling back in April. We also got consumer confidence in April. We have 124.2, so which is a pretty high number for on this index. It was supposed to go up to forecast at 126.9 and exceeded that to 129.2. So people are feeling a lot better where things are at so far in April, which is obviously a good sign for the economy. Last but not least, continuation of the housing. We had pending home sales for the month of March. So in February, it dropped 1%. However, in March, it increased to 3.8%. That's probably helpful with the weather improving in a lot of areas in March, so that's people are able to get out and view property. So this is probably kind of in relation to the weather as well, improving in March. All right, so let's jump over ahead here to the headline news. Stock market is down. We do got more corporate earnings. One of the things that's really kind of pushing the stock market today was after hours yesterday, Google released their report, and they disappointed. They missed their revenues, first quarter revenues, and they're pretty a big component in there, which is kind of weighing down the index as a result of that. FOMC begins their first day of their 2-day meeting. So tomorrow they'll give their announcement, usually right around 11 o'clock, 11:15 Pacific Standard Time in the morning. They're not expected to raise any rates, but they will be listening carefully for any cues into their next rate hike or maybe rate cut, or any clues as to their next movements coming in, and maybe future movements that they may proceed. See what they're gonna do, what they're thinking, I guess. We also got factory activity in China, which was still in expansion territory, but it did decline from the previous month. So that's something, of course, they're kind of keeping their eyes on a national global level. However, in the EU, the GDP improved a bit from 0.9% increase to a 1.5% in the first quarter. So EU got some good news in terms of economic, hopefully recovery. I mean, they've been really slowing down and possibly going into recession, but this last GDP came in at 1.5%, which is obviously a good sign, an improvement from 0.9% the previous report. Let's jump ahead to see how this is affecting on the bond market here. Bond market's up 3 basis points, so it's not enough for any rate change. We did close down yesterday, down 9 basis points, so this kind of helps eat into that. So we're not really down too much. So we do have so we remain unchanged to interest rates here. And as you can see here, we are at 2.5, we'll round it up, 2.52. So we're still kind of in the same range. We were at 2.53, I think, yesterday. So we're still in the same kind of range on the 10-year Treasury here. So yields are kind of still in that same range here. All right, so that's pretty much a wrap. Again, mortgage rates, as we're doing these reports for, mortgage rates remain unchanged from yesterday. And you guys enjoy the rest of the day. Thanks so much for watching. Bye-bye.